Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be taking a look at Ethereum. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here we have the Kraken chart on Ethereum, and we just got a couple things going on right here. We're basically going back to this 2017 swing low, and we've got our blue Fibonacci up here to the high in 2018. And then we took the orange Fibonacci from the high at 2018 and ran that bad boy all the way down to the low in December of 2018. And then we have the green Fibonacci running from that low all the way up to our most recent swing high at 366 in June this year. And then now we're coming back down here, and now you see we've already realized on the green Fibonacci, we've already realized the 618 target. We came down to it and then went below it, came back to the 0.5, got rejected, came down to it, came back up, and now we're finding the 618 as resistance. So you could see that based on that, the 786 will be the next target for the green fib, which is around that 142 range. Okay, and now let's look back at the blue one. So you'll see we had the blue fib, we came all the way down here, we got the bounce up and it took us up to our 786, and then we came back down and we went back below the 886. Now you'll see, because we're on log scale, it looks like a huge amount of distance, but that's only because the price had moved up so quickly. But we're actually like, there's no further retracement we can make on the blue one, based on Fibonacci. We're already in between the 886 and the 1. So that's already like out of the cards basically. And then as far as the orange one's concerned too, we didn't even make it back up to the 236, so we're not even able to technically confirm that that was in fact a swing low here until we make it to the 236. So by failing to get up there, we can't even really use this orange fib to validate anything until we at least get back up to that point. So at this point in time, there's two ways you can look at that. You can say, okay, we're going to come down and retest the bottom, and then we can put in a new swing, and then we can potentially get a higher swing from there, because right now we have a swing high, then we have a low, then we have a lower high. So we're clearly in a downtrend. So you could say that what we expect to get next is a lower low, because we're trading with the trend and we're clearly in a downtrend. So, and then looking at the weekly here also, I'm going to turn off all these fibs right now. You'll see that we attempted to get back above these moving averages, and we came all the way back up. We made it above the 90, but then we came down and we sold back off. You'll see the 200s because of the time of the chart. It's just not that old on here, but you can see where the 200s are at. We fell right through them. We found a little support, came down, then we retested them to try to get back above, and we failed, and that's when we got that massive dump. So at this point in time now, we're below the 10, we're below the 21, we're below all the moving averages, and what we're seeing right now is the 50 is crossing over the simple, the 200 simple, and we respected the 200 simple and the 50, attempting to stop that death cross from happening. So now what we'll expect to happen soon is, as long as we stay under 206 on Ethereum, which I don't see any reason we would not, it looks like we're just going to stay underneath these moving averages and get forced on down. But it looks like very soon on the weekly we're looking at a death cross between the 50 exponential and the 200 exponential. And although a lot of times we will see like some kind of bounce off that, we typically see a sell-off prior to it, and then it bottoms right around the cross. So at this point in time, I would say, based on the weekly chart, Ethereum looks like it's getting ready to go down. And again, we already got, you see back here, we can probably get what I was just talking about, a similar signature. The 50 was coming down here. We got the 5200 cross right here. And then we bottomed out just after that. And this was the 50 and the 200. So this was the bottoming, was at the 5200 crosses here. And then we got to push back up, attempted to save it. We rallied above the 50, above the 200s. And then when we started selling off here, we found no support. We immediately dumped back down to a new low from that. So that's exactly what we can expect to happen on the weekly. We're about to get that 200 cross with the 50. We already got one. We're about to get the second one. So I think this range right here between 153 and where we're at right now, like 170, 175, that's where we can expect to stay stay down here until we get this cross. Once we get the cross, we could potentially get a bounce back up. And again, I mean, we could maybe get it as high as 237, but there's no reason to be there right now. There's no reason to be counting on that or even trading that. You're much better off. I mean, let me put it like this. You know, for this whole period right here, you were obviously better off short in the market. And that's a massive amount. That's a 95% drop from the top to the bottom we came down to. So that's 95% drop. And that's 343 days. And then here you had a 346% increase in a period of 196 days. And now we're back in a downtrend. I mean, the fact of the matter is, the way I look at this is, you're better off being short in this asset until it shows you a reason not to be. You know, and I'm not saying just go short in the asset right now, right where we're at, because we are at a support point. You can see we're finding support at the same spot. On this weekly chart, we're finding support at the same spot. If we sell off below this, if we close below this on the weekly, which closes actually tomorrow night, it's less than 24 hours away. It's like 16 hours from now, 15 hours from now. But if we close the weekly below this right here, I think we can expect continued sell-off. I mean, there's no reason to think we're not going to, at least if we break through the support that we've been holding for all these weeks right here, if we break through that support, I mean, the next potential spot, that's another 17% down. That's another 40% down. That's another 50% down. I think that's much more likely. We're under all the moving averages on a weekly time frame, and we just failed essentially on this weekly test up here. There's no reason to get bullish on this thing. There's no reason to be taking trades against the trend when we're clearly in a downtrend. And even on like the daily, we're below all the moving averages. The SAR just flipped back over. I mean, I think at this point in time, we're likely to see continuation at least down to 151. So there you have it, guys. That's Ethereum on the longer time frames. It's not looking great right now, but still potential long term for it. But there's no reason to be getting bullish. Let's just keep trading with the trend and riding the coattails of the whales. All right, that's Crypto Trend Trader signing off.